Hello, everybody. So we are back with Trader Ferg for a monthly mentor catch-up. How's everything going, Ferg?
Good. Good to be back. Yeah, no, there's nothing really too interesting going on here.
Oh, it looks like you just
Just been
had a training session. What, BJJ?
yep. No, I've got another fight in a month that I'm
Have
trying to
you?
get ready for. So yeah, trying to keep up with the comps here. Doing one every quarter. So yeah,
Body
really
still
enjoying that.
holding your ground?
Yeah. No, touch wood. No injuries for no injuries for the last year. In a year since I tore my ACL, and since that's been
Yeah.
better, I've been 100%. Yeah, so hopefully the body holds together.
Yeah, nice, man. I've got quite a few questions this time around from guys interested in your opinion, mostly a lot on natural gas, some on gold and
Yeah,
silver. But I just read your latest article, the Chinese tech article 2.0. 8%
yeah,
position is quite eye-opening, mate, for you. Uh, yeah, and it's you think the best
yeah,
way to play that whole sort of sector is through that Hang Seng ETF, is it? ETF ticker?
yeah,
Yeah.
yeah. Also, the Hang Seng Tech Index.
Yeah,
Yeah, it's just
tech index.
I love that trade because it's such a different angle. Like if anyone's looking at the overview and what I'm trying to do in the portfolio, I'm just trying to like make sure I don't miss a major trend that's uncorrelated to the rest of the portfolio. Like I I already saw some of the questions, and a lot of people were asking like kind of why not add this oil and gas producer or this like um, Canadian oil producer, and a lot of it's not adding anything to my portfolio. Like I'm already balls to the wall with a whole lot of sort of oil and gas exposure, and if I add like a few more sort of Canadian producers, it doesn't add anything. Whereas
Yeah.
what I've been trying to do is just find super asymmetric stuff that's completely uncorrelated. So a way to view this is just like kind of got the like energy's got very little to do with where the Chinese tech goes. And so that latest piece was just about making sure that I'm spreading a net and can capture whoever's like the future big winner and captures global market share for a lot of the tech, and you can already see it. Like, kind of, I just want to make sure I think China's going to dominate the developing world sort of growth scene with tech, and so you could have some pretty monster companies grow out of it, and you get in super cheap. In a funny way, I think they're going to kind of they will be they will close a lot of the gap that we're currently seeing with US tech, and it's because they're going to capture a lot of what like US has kind of been forecast to capture. And this is like easy to like the one that I put in there to start with. That's like just obvious is Tesla versus BYD. Like you can just see that the offering is so much better. Like it's cheaper. It's arguably better quality. It's designed for developing world. Like Tesla's obviously straight battery electric, and BYD is going with more the plug-in hybrids, which are far more adapt if you're in a developing country that you've got unstable power, you might not have access to quick charging.
In Paraguay, there's literally a BYD shop a couple blocks from me, and you see him driving around everywhere. I get in an Uber here, and it's a BYD.
Yeah, well, I just took my wife down to Uluwatu. We went to this cool new restaurant there. That's like someone was actually on a resort. They found a big underground cave, and they built a restaurant in it.
I
And
think I
it's
saw that. I saw
you
it
got
on
to like get a
Instagram.
booking.
Yeah.
Yeah. You got to get a booking a little while out, and we did that. Went down, got a place with the nanny down, and so had a nice dinner out. But point of that story is on the way down, it was just crazy traffic, and there were lines of BYDs, and I've never seen, when you're just cruising along in traffic. And I was just looking. I would have taken a photo, but my little guy had my phone for cartoons, so I couldn't take photos. But yeah, it was there was I've never seen a BYD in Bali prior to maybe 3 months ago, and in that one road trip down, I would have seen 40, 50 of them.
Yeah, right.
And they stand out. They're by far the best looking cars.
Yeah.
And it's kind of fascinating because it's a like in this one section where it was just an absolute crawl in traffic, it was just Toyotas, like all the Toyota, cheap Toyotas that have normally dominated here. And then it was just this line of BYDs, and the BYDs just look so much cleaner, classier. And yeah, this whole Chinese tech is I think people are thinking about it wrong in the way that they're like saying, oh, this is where they'll dominate the market, or they're gonna get Chinese will get priced out of the US and European markets with the tariffs. But they're not thinking that it's going to be the incremental buyer that can now afford a car that's so cheap. That's where all the growth is going to come from. And it's why these companies are going to dominate. And that was kind of the switch I wrote about in that post, was going over from Web, which is purely internet based, to the Hang Seng Tech. And this is John as well. John was pointing out, he was like, he was just like, yeah, you would have, if you'd limited yourself to internet based, you would have missed the likes of Nvidia, Tesla, and Apple, depending. Some people still include Apple in the App Store, but yeah, you could have potentially missed 3 of the 7 magnificent 7 as a sort of an analogy. And so expanding to the Hang Seng Tech is the 30 largest tech companies, and so they have a mandate to go wherever. They're not limited by web-based. And so I just like this position. You can go bigger. You could have gone with the Investico Tech Index, which is out to like 150 or 148, I think.
Yeah.
And what's interesting is these have been shorted as well. It's almost a joke within my portfolio that most of my largest positions have got like between 10 and 15% short interest. And
right.
Between, I think K-Web was at 8% short interest. I think Investico's probably around, no, K-Web's even higher. I think K-Web might be 13, 14. That CQQQ is 8%, the Investico Tech Index. And then if you go to the Chinese large cap, that's crazy. That's like 30, 40% short interest.
Jeez.
And all of that's just a fancy way of saying it's super hated. Yeah. And on the mirror image of this is people have given up shorting the Magnificent 7 and US tech in general. There's too many people have been run over, which is it's an interesting time. So coming back to your like question of like why so big, it's because it doesn't correlate with a highly correlated portfolio. And I found that out the hard way with like kind of as hard as I am on myself for like the sort of how I got beat up last year with energy. Even if I'd kind of gone between sectors, it was all the same correlation. Like I could have really eased up on uranium, but I would have gone heavy and offshore. And I probably, unless like some of the areas, some of the really tiny stuff, particularly like Namchong and Seatrim, have been quite uncorrelated. But if I'd gone into the likes of Valaris and Tidewater, those have had just as hard a time as a lot of the other stuff. Yeah. And so looking at the portfolio positions I love the most, they're all like little silos, like the Chinese tech, the likes of rhodium, that just doesn't give a shit what goes on in the market. That thing will just go sideways, and then one day it'll just light on fire, and I've got no idea when. It might be next year, might be 5 years from now, but I think that thing will eventually run hard, and that ties into the whole plug-in hybrid story as well. Obviously watching the likes of Namchong and Seatrim just grind higher and not really care about what the market's doing.
Namchong and Seatrim, and you've covered them extensively over the last year or so, but they've only, I think, no, it'd be less. It'd be like 6 months or something. They've fully broken out from a little short consolidation period, it looks like. Still happy with those positions and holding and not changing anything there?
Yeah, love them. Well, it's this whole idea that, honestly, you don't get much reward in this market until the cash flow turns up. Like, it's this, got kind of a post I'm started writing now that I think everyone should go and listen to the Grant Williams interview with Mike Green. He just goes over passive as well. And it just, whenever he talks, it's a bit disheartening, like hearing him talk about it, because he's sort of, his framework is that passive is essentially driving everything. And we're all just making narratives around where passive is kind of pushing the market. And that until that breaks, you're not going to get like big money flowing into a lot of the small activist stuff. Like there's a smaller and smaller pool of active players. It was quite interesting hearing him talk about crypto. He kind of sees as people just understood that there's the fundamentals are mattering less and less. So why not just completely like spill over into just trading stuff on price? And it's I don't know if I fully agree with that, but it's whatever it is, you can tell it's just pure speculation. Like, how else do you describe sort of meme coins? I was kind of trying to look for a historical sort of parallel with in times where you're getting debased, like speculation really kicks off. But
yeah,
no, the one conclusion I've kind of come away from is you want stuff where the cash flow is really just is showing up, or it's about to, like what I often look for in companies is where they're making that first green shoot of like net income
inflection.
It's going to ramp. Yeah, and it's this latest piece I have is kind of you saw it originally with coal. Like the market wasn't actually very efficient when you saw coal prices really run and the companies do nothing. But then that was kind of an obvious, like they were going to play catch up. It was just going to take time for it to flow to the bottom line. And I think you could see the same with gold, especially if gold kind of ends up hitting where I think it will. The fact that the miners haven't moved and gold's going to keep shooting up, there's a point at which that gap will start to close. And so that's looking pretty attractive as well.
Oh, right. So gold mining companies or...
Yeah.
When does that money...
The troubles...
So when does that money flow down to
how to do it? Yeah, no. That's when does it actually flow? Because it's a different game than looking at coal miners that are it's a bit easier. Yeah, it's obviously how much do they move and how much the gold price move, which is something I think could be pretty substantial if you read into what the Trump campaign's doing. I also like what Luke Groman's been banging the...
See, Luke Groman's long-held view that Trump would revalue gold to far higher than the market price.
Yeah, so this is so Scott Besson, who's pretty damn smart. He made a statement that they were going to, I think it was something along the lines that they're going to revalue US assets to benefit the US people. That wasn't the exact quote, but it was something along that lines. And the only way you could really read it is that they were going to revalue the gold holdings, and because they currently hold the Fed's gold at something like I think it's like high 300s. They hold it, so if they just revalued it to current market rate, that would be like a massive. It was nearly $1 trillion windfall that they could then utilize. And obviously, if gold price is even higher, then it's a bigger windfall. And you've got the whole kind of the whole setup as well with China starting to net settle gold as a means to trade with other developing countries. So it's all beneficial for gold. I see it's one of the only things that can really be like if gold just opens tomorrow and it's 10,000, it doesn't break anything. And that's something that Luke's like explained over and over. Like it's only really gold and Bitcoin that are actually pretty useless in society. Like if you have almost any other commodity, even silver, it's still got industrial uses. If you revalue at 10x, you break a whole lot of stuff. Like you revalue, like if oil jumps 10x and like industry, then the economies will shut down. It's been like monster demand destruction, but with gold it doesn't. And so, I do see that gap opening up between the gold price and just the lack of response of the miners being an opportunity. It's just, is there any again, I've always avoided it, and I've avoided it for years.
What level of
jump into more gold?
Sorry, mate. What level of the miners would you look at? Would you look at the majors, the mid tiers, or would you? I suppose you'd have to stay in those two categories if you were going to play it, or mostly majors.
Yeah, yes. I've been going through it all and trying to piggyback off smarter people like Fred Hickey and Bill Fickenstein, like just going through and seeing all their picks and what's interesting. And
yeah,
honestly, the vast majority of it seems to be like in the too hard basket. Like it's just
right.
Probably best just to buy like a junior ETF and play it that way, play it with a larger position size. Some people I respect actually do it that way, and then they try and add the kicker via really specky stuff on top. And so they try and do the whole like warrant stripping, like get involved and then just keep the warrants. They just go like
involved in that now.
Like crazy. Yeah. Go in just do like 0.25% position. So you're just doing it was position size and you'd slam 5% on the ETF itself, and then you'd add another percent. Instead of doing it via like a straight option, you'd do it as really small positions on a whole lot of specky stuff.
Yeah, Rick Rule or something.
Yeah, it's again this kind of it's just a head scratcher because I really don't like playing these. It's almost like VC theory where you know that this is going to be a whole lot of duds and then you're going to have 120 bagger. Just I inherently dislike that game of going into miners because you know there's going to be so much disappointment. And
it's the whole industry
in the portfolio. It's like it's what we started this talk with why I'm throwing 8% at Chinese tech. Maybe I've just got a bit too much PTSD from opening and looking at stuff like Global Atomic, and it's always just a fucking disappointment. And
jeez, uranium is just horrendous. Oh, I can't even look at it. I see the spot price. I think it's down to $66 a pound now.
That's absolutely fascinating because it's interesting because there's only like Cuppy says it. There's like the market is essentially like a WhatsApp group of people trading back and forward. It's like a dozen people of the actual utilities that sort of bounce around, and more than a dozen, but much more. And that market's essentially dried up. Like there's no. I remember when I was looking at it late last year, it was like historic low volumes, and can't imagine it's changed much since then. So this has all been done on like no volume, and then to top it off is the fact that there's kind of no like terms held up, but there's like a fraction of the volume there should be there as well. Like last year there was only 105 million pounds contracted against replacement rate of call it 190 million pounds, and the year before that was like 158, 160 I think, and so that was still only whatever under what's that roughly just over 2/3 contract rate. And so you got a whole raft of utilities that have to contract, but they're holding off, whether they're holding off for additions to conversion or whatever the reason they're holding out for. You're having this market that makes little sense. I think it's on opportunity, but then
like how long do you wait?
So frustrating. And then you got the shorts as well that always make you question your conviction. Like it's nothing like seeing short positions keep building up to 10, 15, even 20% across a whole lot of stuff, and they're minor. They do dumb shit anyway. So I think this all ends in like it was like Mike Elkin was like, we're past the point, and this was like a year or two ago, of like we're far past the point of the market being out of balance in like a rational way. But to me, it feels like it's with all this short and uranium, like a lot of stuff, a lot of the like the commodity value, so many shorts packed in and so many people packed long on the other side of things that when it switches, it'll be fireworks. But God knows when that is, and God knows how much more pain and how much more selling if there is a big sort of a painful event as well. So yeah, it's a real head scratcher of a market. Hence as well, why I'm finding a lot more solace in stuff like rhodium and Chinese tech. And
Yeah.
I just, I want all these different plays. Yeah. Mm.
Yeah. Frustrating, but I'm just in the process now of still moving my shares out of Australia and into interactive brokers. I still haven't done it and got around to it. This is a bit of a different subject, but it's super difficult. My shares are stuck at the registry, so they've been whipped out of Westpac, converted to a special number, an SRN, that I need to then send to interactive brokers for them to show up there. And it's literally been almost 3 months since I started the process, and my shares are like in limbo land somewhere. I'm constantly getting denied because they're not believing my change of address. I haven't been able to touch anything uranium, so it's all just sat in like limbo land for the 3 months. Unrelated, but
it's honestly probably a good thing. I feel like at the moment it's one of those times just to not look at your account and go do something else for a while. Like there's literally nothing. It'll just make you more frustrated because like most of the news flow is actually positive, but like you wouldn't know it with it's the most
yeah, that's right. That's the biggest thing I keep noting. It's all positive news flow for uranium. Like everything you see, like reactors getting built, companies. Oh, besides a couple, companies are still doing surprisingly okay. Like they've cleared up a lot of issues they had a few months ago. I'm talking about Boston Paladin. Yeah, the price just keeps going down, and then the portfolio of my holdings reflect it. So, yeah, looking forward to getting out of that trade altogether, hopefully shortly.
Yeah. Also remember when you're feeling that way, pretty much everyone is. It's, again, the market's got a way of flushing you out just when you think it's all hopeless, and then it'll make up for it in short time. Like it's whatever it is. Sentiment's like a trailing 3 to 6 month sort of lagging price action. Like maybe the other way around. Yeah, it's just how you feel about something's literally what it's done the last 3 to 6 months to a large extent. This is just super frustrating. Yeah, but anyway, all you can do really is just keep making sure you've got a finger on the pulse of these great risk rewards, and that's what I'm trying to do. I still believe uranium. Like, where else are these utilities going to go? Because that's one of the uranium thesis. They can't go anywhere else. There's no substitution. There's no pushing. You didn't actually need any of the AI demand, which was kind of frustrating. But there was almost a tell as well that how much sort of speculative money had come into space that left quite quickly.
Yeah.
And I think it's across the entire commodity space it's just that like no one cares. That's the biggest takeaway. There's like no big money cares at the moment.
I like what you just said about do something else when it's like this, because I've fully embraced that, being involved with another company, but another exploration company here in Argentina. So it certainly takes off the stress of staring at the portfolio going down over the last year or so. Couple of questions, mate, I want to go through now, if you don't mind. One, why has the price of thermal coal gone in the opposite direction in natural gas? What are your thoughts on the coal market?
Yeah, so that has been frustrating, and that was something I really got wrong, was that correlation between. So for anyone, I've got a chart of it here, I think. Yeah, can I share? Can you see that chart?
Yeah.
Yeah, so this is just it was a solid correlation for a long time, and just for whatever reason,
that just explains it.
November. Yeah, the correlation broke down and it
perfectly explains it.
This is a
disappointment
because I've been using coal, particularly kind of young coal and whangela as a way to play natural gas, and really hasn't worked. As I say, this correlation just fell out of bed. And as for reasons, for one, there's been enough LNG. So did I close it off? Are you back to full screen now, or is that still in the background?
No, it's gone.
It's gone. Cool.
Yeah, back to full screen. Yeah.
Yeah. So few reasons. So for one, there's been enough LNG that Europeans haven't bid it up. So essentially there's been, the way to think about coal is it's like a sort of a more out of the money call option that they'll use when they have to. And with weaker economic growth, industrial decline, that call option hasn't gone in the money. And so there's been more than enough LNG floating around that they can just use LNG. And there's actually been LNG being redirected to Europe from Asia, and because Asia has needed it as well. So just a lot of it has been due to economic growth, and there's been sufficient stockpiles. And to this off, there is they're continuing to close. So I think they closed 5 gigawatts of coal power in Germany as well. So they're still following with their coal exit. So it's been a real disappointment, and didn't see that happening. So I was completely wrong on that. I sort of saw that correlation holding up, and there not being the sort of, I've got, here's the article, because the article does a good job of explaining it as well.
Makes sense what you're saying.
If I've
read it. Are you still holding Peabody? Have you fully got out of that position? Because that's taken a big haircut.
No, I got out. Didn't do particularly well out of it, because I started selling covered calls on it when it was at 28, and I should have just sold it straight out. It was my mistake. Like, I got out of a chunk at like 20. Got out a chunk at like 26, and then I got out another chunk at 23, and then I sold my last chunk at like 18 something, because I think I averaged like 22. But I would have done so much better if I just said, I was trying to be too smart and exit it with covered calls, and it kind of bit me in the ass. I just didn't. I've gone over Peabody in that I didn't, when they executed the acquisition. Pardon?
I must have missed it when you got out of them. Yeah, I can see that. Yeah.
And so I just sold out. And the fact of my main thing was, like, I kind of wanted a decent amount of thermal exposure. I like met, but I didn't want my whole portfolio to be met. And with Whitehaven switching to met, with their acquisition of Dornier and Blackwater, and Peabody went that way, and they had more execution risk. I was like, I don't want. It was almost a tell that everyone was chasing met, and you also had the problem as well, is that if you were bullish on met, why not select players without all the royalties? Like, Peabody, you've got all the royalties. Every additional $100 a ton, you pay a whole lot more to the Queensland government. So why not just stick with a likes of Warrior, where you don't have the royalties, and you've and it's also coming back to this thing of no one cares about kind of like future earning capacity with Warrior. No one's giving it any praise for like Blue Creek coming on halfway through 2026. So I'm increasingly liking that position over all the other Warrior, over all the other Met positions, because no one seems to really care. They're just dumping them all. So this is a great article for anyone reading, and it's essentially that they're redirecting a whole lot from Asia. So Asia's obviously experiencing slower growth, and so they're having that option of buying it off them, which and then in typical Euro fashion. They're talking about putting price caps on it. That's not in this article, but it's in. I've seen it otherwise, so that would obviously drive it back out because it's a international market.
Yeah.
But yeah, even with the colder weather, it's thought that might have spilled over into coal, which it has not. So you've got stores currently at 48% against 67. So it is getting tight, but overall, yeah, just a disappointment, honestly, on that trade. And granted, like the coal companies are fine, like the way that was kind of always the play with the likes of Fangella and Yancoal. You can benefit, but you don't lose much if you're wrong. But they're just sideways.
Yeah.
And coal still hoping that they miss out on the acquisitions and hopefully get a big fat special dividend, because they're still sitting on the dividend that they didn't pay out to hold it for M&A. But yeah, have missed out on that run in gas. As for
how would you play gas? Yeah, sorry to interrupt again. Just wondering, like a lot of questions on natural gas, but I remember the big question's always been, how do you play it? So
obviously, gas producers in the US, like it would have been, would have done well. But I find it kind of, it's tricky as well, because there's obviously a big weather component. There's a big LNG component, which is see Trump's telling the Europeans they have to buy more, and there's an awful lot of LNG coming online in the next few years. And then you've also got, it's kind of what I'm putting in my Ferg's finds at the moment. Like I've got under what I'm pondering, like, am I too bearish on Europe? And then I've got 3 headlines. One's like, there's like now talk of reconsidering the Russian pipelines in like a surrender. Like, could they possibly bring them back on? There's another within Germany of reconsidering starting the nukes. And there's another headline of them considering delaying all the carbon taxes sort of 2 years. And so I am wondering if they're at the point at which, like, you could actually see some reversals in some of these like crazy policies. And if any of those happen, then that's certainly not a positive for natural gas. So there's a lot of sort of geopolitical risks at the moment as well.
Okay.
So yeah, I'm not finding it, between like playing the weather and then playing all the geopolitics on top of it. I don't find that as compelling as like the gold trade. Like, you've got the commodity hitting higher and you've got a pretty firm view that it's going to stay higher. I prefer to get some exposure to that than play gas anymore. I think gas is too hard. And also just the fact that everyone's asking questions and it's all eyes on it means it's probably probably a bit popular as well. I don't know. I don't have any deep insights into it other than like DeepSeek taught us one thing, to be careful of like whole AI demand, just how high it's going to go. That's something to note from the .com boom was there was with laying all the fiber optic cables. Like, a lot of that was done on 2 assumptions. It was done on the assumption that internet growth was just growing massively, and I think at the peak they thought it was growing like 1,000% a year, when with hindsight it was more like 100% a year. So it was like massive overestimate, over sort of extrapolation. And at the same time they had it was like a big efficiency jump in how much data you could push through a cable, and that was like a massive jump as well. And so in the end, a lot of the cable they laid wasn't used for a long time. And so I always wonder that whenever I see that kind of DeepSeek, is like, are they going to get a whole lot of this the AI models? Are they going to get them that much more efficient? And then a whole lot of these sort of data centers aren't even required. And that's DeepSeek kind of gave a glimpse into that. Maybe they get it really efficient, and all this projected growth doesn't end up appearing. And that's kind of like almost a history of technology, is be really careful forecasting anything.
Yeah.
And so that's what I just prefer sticking with stuff that doesn't involve those sort of bloated demand. You always want to stick with like the most boring demand curves. Back to like thermal coal, like it's interesting to discuss like AI's effect on it, but I think like the thermal coal, you're far safer just projecting like developing market like aircon growth and like increasing their standards of living. It's a bit boring, and it's only like it adds.
It makes so much sense. Over to Canadian oil producers that are pretty beaten down in the last few months. Do you have any views on them? Because a lot of them are looking like they're going to be absolute cash cows and just go ahead and buy their own shares back, do buybacks. Do you have any views on any of those names?
Yeah. They like I follow a lot of people, whether it's HFI Research, kind of Josh Young, like all that. Everyone's got their kind of love in that sector, and I think they're going to do amazing. But it's just back to that. What we were talking about the morning at the start of this chat was I don't add anything to my portfolio if I just add a whole lot more oil and gas. Like I'm already if you count like the likes of Nam China Seatrim as oil, like my portfolio is already sort of nearly half just oil derivatives or oil in itself, and like adding more oil doesn't do anything, and it just means I get beaten up more if the thesis takes longer and jumps around. So that's the reason I personally still think, well, obviously I've shown it with my portfolio because I've put money where my mouth is, and that I think the drillers and the offshore services where the most asymmetry is.
Mm-hmm.
Part of that is not probably to argue against Canadian oil producers. It's just that there's a whole lot more like stuff that can go wrong with an oil producer that's outside my circle of competence. Like I'm far more comfortable investing in sort of a sea drill that's gone bankrupt twice, and I can count its number of rigs, and I can like understand its business model. Than something that produces oil and gas that's a bit outside my circle of competence, working out what's undervalued, what's overvalued, what's produced, not produced. Like I've had this talk before about with you about was it Pantheon Resources? Like the bull case sounded just as good to me at the top as it did in the recent bottom of the drawdown. Like if I can't tell the difference, like I'm out of my depth. So it's got to learn that as well. And I've certainly learned that with some commodity producers is not to be too smart. I'm increasingly enjoying just being in like a straight metal like rhodium, like just sitting there, or in a Chinese index. Like there's
that's definitely
too smart as well.
That's definitely surprised me just reading your last article that you've just gone straight in with an 8% position, because I've been following you for a while, obviously, and usually just like 1% to sort of 5% your range, and then I was just like, Jesus. So you're just searching for an unconsolidated position there to the rest of your heavy energy, oil, uranium portfolio, right? Yeah.
Yeah, well, that's a reflection as well of, again, this thing of circle of competence. Like what ability do I have to go into China and work out which will be the next tech winners in China? Like I've got so little idea of what's even going on there. Like I was even fascinated with I think it's this. Let me quickly find it because I don't know where it is. This chart here, like it is like the darling of like China tech with Alibaba, and just quietly getting like eaten alive by like a few names I'd never even heard of. And so like what ability do I have to know like who's going to be these like winners? Like I'd never even heard of Pinduoduo, or like I can't even pronounce some of them. Yeah, like just it's the beauty of an index is it captures this for you. It'll like I'm just betting that there's going to be a company that's going to dominate global market share, and I think it's most likely going to be China for the way that they've been running their industrial policy, having like these cutthroat sort of price wars. I was meeting with a guy the other day who's spent a lot of time in that market, and he was saying like the Chinese don't know all their own EV makers. I think as of 5 years ago, there's like 230 of them, and it's now down to like 120. Like the price war is just ridiculous. It's the complete opposite of what's going on in the West, where you just have subsidies are almost like what was it? One of the, is it Nikola or anyway, one of the EV makers that just hasn't even made a cent, just got given another $7 billion loan to keep it going. I had a
Sure.
give me 1 sec. I'll try and find a chart of it because I did take a screenshot. My computer's just full of screenshots of stuff I want to remind myself to talk about. So I believe, so this is Nikola, which hasn't made a profit for years. I think this has got like I want to say it was like $7 billion handout. It was by Biden on the way out the door.
All right.
This thing's just like lighting money on fire. And this is what the US is doing. And whereas China, they're almost phased out subsidies, and they're also phasing out. So a way they kind of subsidize them was by the state entities buying big orders of their sort of production. And so they were subsidizing them both sides. Yeah. And you got the US like handing over billions to company like this, it's just money on fire.
Jeez.
And the other ones I was talking about, because this is under the same idea, is I've had people reach out and be like, you love hated stuff, why not look at like the investing in solar? This is the largest solar manufacturer in the world.
Actual manufacturer.
Yeah, like this is in China. Just look at that. Like, look how much they're just lighting money on fire now.
Just falling off a cliff.
Massive run up.
Yeah. Wow.
And
that's just because they don't have any subsidies. They've lost the subsidies. No.
Well, there's a lot of competition.
Competition. Okay.
But they also have there's been pretty cutthroat competition. But China's also, it hasn't been covered nearly enough, but China has been like dialing down the subsidies, but there are still subsidies for renewables. But the main one was that now from the end of April 24, renewables have to compete with coal and hydro. Before that date, renewables always got a price linked to the coal index, so they got like a minimum price. And so why that's important is with solar, if you add too much, you get what's called solar deflation. So you drive prices negative, and if they get given a fixed, like a guaranteed price, you can obviously keep adding solar to the grid, even though it's driving the price negative at that peak hour, which is usually middle of the day.
All right.
Since they've removed that, it kind of puts a limit on it. So you're not going to get the same thing happening as happens in California and even South Australia, where it drives prices negative. Yeah, and plug power, I think this was given, say, 2 or 3 billion as well, and this thing's never made a profit, and this is just lighting money on fire. This is hydrogen fuel cell. And so this again comes back to why I want to be long Chinese tech. I just think the what US is doing is they sort of almost point at the Chinese and saying we're not subsidizing enough, but there's just no competition. It's a different game.
Geez, mate, you really dig into this stuff. I sometimes forget how much you know about this stuff, and you can just recall the information. It's nuts, is it? What do you do besides this stuff and BJJ? Not much.
Play with.
And the little man, of course.
Honestly, that's my only superpower. Really, is I find this stuff interesting. Like, my wife's like shopping online, and I'm like looking at this stuff.
It's like digging into solar panel
I'm a
company.
weird, yeah, I'm a weird individual in that I really like understanding. Yeah, I
Just
like
the
understanding
ability to
stuff.
understand it.
Mm.
What I like about your articles too, the ability to understand it and communicate it to people like myself who just who have to read things like 3 or 4 times before I understand it, and then yeah, it's a really good skill you have as part of your Substack. For a lot of people have told me that as well. You make it sound like readable so they can understand it coming from like an entry level.
That was Brad's teaching. Like,
Yeah,
I think when he first asked me like write a piece for him, he was like, "This is really good, but it's fucking boring. Like, there's a lot of value in what you've just written, but I'm like bored shitless reading it. Like, I'm not going to
really,
read this
yeah,
again and again, even if there's like hit people with a wall of text, and like even if you know it's valuable, you're like, oh, like do I have to read this essay?" And so, well, like, it's just respecting people's time and attention span. Like, I will 100% of the time swap out like a detailed paragraph for a stupid meme. If I
yeah,
can explain something via a meme, well, it was like this piece here. I'll like dig it up because it's like a great example of it. It's like I could explain like Tesla doesn't make sense here. I could
yeah.
say this is like the rate at which its earnings are dropping, like its earnings per share is like rubbish now. Or I can just like I could just make a silly meme that kind of says like shows the same thing in a way that like this meme. Like it just like someone can glance at it and they understand what I'm talking about, and then you compare it to their like main competitor, and it's just obvious. And I find this like respects like the reader's time as well. Like, it give them a laugh, give them like Brad's take was like you should aim for it to be like more stories and entertainment than like just dense information, because it's just there's so
Well,
much dense information that it's hard to get through these days.
I see a lot of other Substacks kind of copy that model that you've just gone through there. And I think it originates from your work in the early days. It has a very similar ring to it that I see coming up. I'm like, oh, I wonder if this person subscribes to Ferg. Click on their thing, Ferg, paid subscribe. Anyway, it's just how it goes in this. Yeah, especially on
I don't think
publications
so.
platform.
I don't know about that. I think because someone pointed out that like you don't talk about, because when I first started writing, it was more about it was about my life as well. Like, I was traveling, I was bouncing between countries. Like, I always had like an interesting like where I am in the world, where I'm living. And since I've had a kid, like, I decided I don't want to travel nearly as much anymore because it's just painful.
Yeah.
We even this weekend, the place we rented was pet friendly. So in the car it was
I saw the cat.
Hugo, the cat.
I saw the video.
The cat. Yeah, the cat was going nuts in the car and
Yeah, the
jumping
cat.
over
Yeah, the
me
cat
and,
on a lead. Hey, the cat was on a lead.
yeah, the cat on a fucking lead. And yeah, like, life's not as interesting, so I've got to try and make it interesting for people with memes, because my life's not as interesting.
Oh, I
Yeah,
disagree.
just
I reckon there's a lot of people that would want to be doing what you're doing in Bali, mate. I
this
have
guy,
no doubt. Oh, there he is, the
he's a
Bodog.
good
Gee,
shot.
look at him.
Yeah, yeah.
Is he nice and is he nice and calm? Was he still nipping everyone? Did he calm down a bit?
He's chilled out. He's got way fatter and way lazier. So yeah, isn't as sassy. He still doesn't like people walking up and like just trying to like wake him up from his naps with like a rub. Yeah, he'll still like sometimes he scares the shit out of someone having a bark up. Yeah, when they like sneak up on him when he's napping in the corner of a cafe.
Oh, I remember when I walked him and he dropped a big nugget.
Still a bit of a street dog.
Yeah, well, he is. You know, he's a Kintamani, isn't he? Balinese mountain dog. But you got him. He's basically like a street dog when you got him. Yeah. Or was he?
Yeah. We
kind of.
Yeah, more or less. He was only 4 months old, so he wasn't that much of a street dog, but yeah.
And you got a cat. I can't believe you got a cat, mate. What's going on there? The wife must have wanted that. Me must have wanted that.
Yeah. It's not my cat. It's her cat.
No
It's a
say,
ragdoll. Well, it's a great cat because it's like chilled, but it wasn't a great cat with Hugo because a ragdoll doesn't kind of defend itself. You just like,
oh, it's a ragdoll,
and Hugo's just walking, but yeah, walks past like carrying it, and it's just like constantly like telling Hugo off and just carting it around everywhere. I was like, oh, we should have trained Hugo on like a tough tomcat that would have smacked him the first time he like pulled its tail. Not this ragdoll that just takes all his punishment.
Just cops it. I think we covered a lot there, and yeah, you answered all the questions I had this time. We appreciate your time, mate, as always. And yeah, look forward to talking again in a month.
Sounds good. Great chatting, man.